I just talked about Nucor, the steel company, as the kind of high-yielding, dividend-raising company you want to own in this terrible environment. Because even if the stock goes nowhere, remember this one's come down a lot, you should still be able to double your money about 12 years just by reinvesting Nucor's dividends. And that does not, I repeat, that does not include the special dividends that Nucor's paid out every year since 2005. But we don't want this just for the yield. We want to know that the stock can go higher. We want to know that Nucor's fundamentals are okay. Remember, there's a worldwide slowdown. Maybe we shouldn't even be thinking about a steel company. The company just reported its third quarter. It had a nice beat the estimates, earning $2.31 a share versus $2.19 the street was expecting. Even though the steel market's been hurting, revenues were still up on higher pricing. These are some of the metrics. Remember, I always say each industry has metrics of $1,108 a ton compared to $664 a ton last year. It's well up. Nucor's got a fortress balance sheet, $1.7 billion in cash. Of course, it has that juicy dividend based on next year's expected payout. This one could yield 5.7% at these levels. I mean, that's big. Remember, even the biggest CDs are offering about 4%. But even though Nucor gave us a great quarter, there are reasons to be anxious. Management, for a change, didn't provide any guidance for the next quarter. Probably because Nucor CEO Dan DiMicco might have gotten too aggressive. I don't know. He got a little aggressive on Aaron's show, Street Signs, shortly before steel prices and Nucor stock peak. And he said, and we're going to ask him about this. He goes, not a sandbag. We've got to ask him. We've got many, many years ahead of us of a strong cycle for commodities. Now the trend will be upwards very strongly, I would say. This is me quoting him. For another 15 to 20 years. And that doesn't mean that there won't be ups and downs, but the downs will be short-lived and the trend will be upwards. Obviously, we want to find out whether this down is going to be short-lived. Now, I think Dan DiMicco is a fabulous CEO and a great guy. But look, the commodity collapse is quite evident, so I have to be more cautious. You have to be more cautious. Anybody should be more cautious about a steel stock. I watched Bethlehem Steel go from 23 to 2 in about 2 years. That was not a great company, though. Nucor did an equity offering back on May 22nd at $74 a share. That's about $38 higher than the stock is now. Great for the company, but perhaps just awful for the people who got it. No, not perhaps. It was awful for the people who got in the deal. After the latest quarter, and given that the stock's been more than cut in half, and now is a terrific yield, I think Nucor's a buy. But my credibility shot on this. I've liked it all the way down. I've liked it for years and years and years, even before with the previous CEO. But that's why we bring on the chairman, president, and CEO of a company. Dan DiMicco here to talk about the company. Mr. DiMicco, welcome back to Mad Money.
Glad to be back, Jim.
All right, great to have you. First, I'm going to go right to the chase. We had a caller in the previous segment earlier, Scott from Michigan. He said, Jim, you like all these industrial companies because their stocks have gone down, which makes their dividend higher. But how can you trust an industrial company in this environment to be able to pay for the dividend? Can you help assuage this guy, Scott from Michigan, about why a company can afford to pay the dividend, even if it is a big cyclical company?
Well, first of all, it depends on the company.
Okay.
Not every company is in a position to do that. As you know, Nucor has had a very conservative financial balance sheet and history. Our cash flows are extremely strong, and we will have no problem paying the dividend. Now, you have to remember our dividend is in two components. It's in a base dividend of 32 cents a share a quarter, or $1.28 a year, which is paying right now about 3.6%. Right. And then there's a supplemental special dividend that is about 20 cents a share per quarter, or 80 cents, for a total of 208, which is about 5.8% yield. That special dividend is there as long as business conditions are strong, profits are increasing, and we're not in some kind of, I heard you the other night on Donnie Deutsch, you know, not in that kind of environment that you were describing, okay?
Oh, look, I'm worried. I mean, you know, in that quote that you gave Aaron, I happened to be on the show at the time, you mentioned that you thought the downturns would be short-lived. Is that still the case?
We still believe that, although I've got to tell you, we didn't anticipate a financial crisis of the scale that we're seeing today. Nobody did, except maybe you. You know, this is a once-in-a-lifetime situation. I'm 58 years old. I've been in this business for well over 32 years. I've never seen anything like this in terms of the credit crisis. But listen, what's driving this is a global thing, as well as in the United States. We're going to have to rebuild our infrastructure. We're going to have to get energy independent, at least from the bad guys out there. that live in the Middle East and Venezuela and in Russia and what have you. The infrastructure is very built, and the energy bill is very steel intensive. Globally, people want a better standard of living. Things are terrible right now, and they're probably going to get worse before they get better. But if you take a look down the road, you know, you're looking 6 months down the road, Nucor is going to do well. The steel industry globally is going to do well. The best in breed will do better than the average by far. Nucor is one of those best in breed. And so as far as our dividend is concerned, the base dividend is rock solid. The special dividend will depend upon where our earnings go.
Well, we talked about pricing. Your pricing's well up year over year, but how quickly is pricing coming down for steel?
Pricing, depending on the product, has come down significantly, but also our raw material costs have come down significantly. And as you know, Jim, with a company like Nucor, it's not the selling price per se, it's the margin, because our cost structure is highly variable. And when scrap prices have come down $600 a ton on prime grades and $360 a ton on shredded, we can do very well and grow our profitability even at lower selling prices, even significantly lower than today.
Now, this is why when Mr. Iverson ran the company, this is why I first got involved with Nucor in the 80s. But can you explain to people, and I know I'm short of time, I need this time. Can you explain to people why your cost structure is different from other steel companies in a way that you just explained it to me, but many people don't understand scrap, how you are able to cut pricing yet still make a big profit?
Well, the scrap market historically has been basically a month-to-month market. It's not something that you go out and you buy a 12-month contract down like iron ore or coal, which is what the integrated industry uses for their raw material base. Electric arc furnace steel making, which Mr. Iverson and Nucor, along with other companies, helped to popularize and grow to the point where now almost 2/3 of all steel made in the United States is made through electric furnace steel making. It's scrap-based. That price varies with the supply and demand in the marketplace. So when scrap prices go up, people get all nervous. Oh, your costs are going up. Yeah, but so is demand for steel products. So pricing for steel products is going up, and our profits rise significantly. And when steel prices come down, because demand's coming down, scrap comes down as well. And so our margins, at the end of the day, are very strong, even in down environments. That's why in 01, 02, 03, when 32 steel companies were going bankrupt, we were making money.
Right. That's the point I wanted, because I don't want people to think that I'm being too aggressive. In a period of tremendous contraction in your industry, you still paid the dividend, that you are a different kind of industrial company than others. You're absolutely right. One last question. On the conference call, there was a nice woman, I don't know, this Deborah Fine. She was asking about whether you should have known that the stock was going to go down, and why didn't you buy stock back? You feel pretty good that you didn't buy stock back higher, don't you?
Well, in hindsight, hindsight's always perfect, Jim. When we went out for our stock offering, we firmly believed that things were going to continue to be strong for our stock. Look, our earnings have gone up every quarter this year, record earnings, first quarter, second quarter, third quarter. We've just about made as much money through 9 months of this year as we made in our record year of 2006, $1.8 billion, and that's with a $450 million LIFO charge because of rising scrap costs. So nobody's happy to see the price go down, certainly not anybody at Nucor. We don't like to see it because of what happens to our shareholders. A lot of our employees are shareholders. I'm a big shareholder. But at the end of the day, we did not have control. We were doing our job. Our people were doing our job and running well, having record earnings. Okay. But you know what's going on in the marketplace is not related to company performance.
But my hope is, sir, that you stick by the dividend, and that sometimes I feel like that a lot of professionals, CEOs, wasted their money buying back stock. You keep by that dividend. That's how I'd stick by Nucor. Okay?
You bet.
Thank you, Dan D'Amico, Chairman, President, and CEO of Nucor. Look, it's not the same as all the other companies. I only pick industrials that I feel are going to be able to withstand even the situation he talked about a global collapse. That's only about a half dozen industrials. But I'll identify them for you, and I'll tell you which ones to stick with. And you stick with Cramer.